The OPEC production cut benefits oil stocks, so keep watching and we'll tell you which ones. The White House is dissatisfied with OPEC's decision to cut oil output by 2 million barrels per day. Consumers will be disappointed as well, as the move is expected to raise gas prices. But there is one big winner from the ordeal: oil stocks. The experts' picks for the best oil stocks to buy right now. What's going on? The cartel of major oil producers and their allies, led by Saudi Arabia and Russia, announced their largest production cut since the outbreak began on Wednesday. The cut, equivalent to about 2% of global oil demand, will not take effect until November, but prices have already risen. Following the announcement, oil prices rose to 3-week highs. Brent crude, the international benchmark, was trading near $95 per barrel on Friday morning, up about 6% from Monday. As a result, U.S. oil and gas stocks have soared. The S&P 500 energy sector is up nearly 15% this week, led by ExxonMobil or XOM, Chevron or CVX, and Phillips 66 or PSX, while the index as a whole is up 3.7%. This is because lower supply means higher profits for energy companies. Overall, this means higher oil prices and higher cash flows, said Stephen Ellis, a Morningstar senior analyst. According to him, the production cut will result in higher dividends and stock buybacks by energy companies. So far, energy companies have had a fantastic year. ExxonMobil is up more than 60% year-to-date. Halliburton is up nearly 25%, and Occidental Petroleum is up 127%, thanks to Warren Buffett's Berkshire Hathaway significantly increasing its stake. For the same time period, the S&P 500 is down about 22%. The big picture: profits for energy companies in the United States and Europe have skyrocketed this year as supply shortages drive up crude oil prices. Exxon's profit before special items was $17.6 billion in the second quarter of 2022, up 273% from the same period the previous year. Chevron's second quarter profit increased by 277% year-on-year. Energy firms have largely used their profits to attract and reward shareholders, making their stocks even more appealing. This year, major oil and gas companies are on track to repurchase near-record amounts of stock. Bernstein Research estimates that the 7 largest companies, including ExxonMobil, Chevron, BP, and Shell, will return $38 billion to shareholders this year through share buybacks. That is nearly 4 times the $10 billion in buybacks completed in 2021. Companies are much more focused on shareholders than they have been in the past, said Quincy Crosby, LPL Financial's chief global strategist. As a result, the industry is rewarded. The general consensus among analysts is that clients should invest in these companies even if they sell off. The takeaway: the energy sector saved the stock market on its own in the second quarter, and it appears to be on track to do so again this quarter. This OPEC announcement has the potential to make 2022 the year of big energy. Warren Buffett's Berkshire Hathaway on Friday received regulatory approval to purchase up to 50% of oil giant Occidental Petroleum. Occidental stocks jumped 10% on the news to close at $71.21 per share, bringing their 2022 gains to more than 145%. Berkshire filed an application with the Federal Energy Regulatory Commission on July 11th to purchase additional shares of the oil company's common stock in secondary market transactions. The conglomerate contended that a maximum stake of 50% would not harm competition or reduce regulatory authority. Carlos Clay, acting director of the Division of Electric Power Regulation, granted the permission on Friday, stating that it was in the public interest. This year, the conglomerate has significantly increased its stake in Occidental. Berkshire currently owns 188.5 million shares of Occidental, or 20.2% of the company. It passed a key threshold that allowed Berkshire to record some of the oil company's earnings alongside its own, potentially adding billions of dollars in profit. Berkshire also owns $10 billion in Occidental preferred stock and warrants to purchase an additional 83.9 million common shares for $5 billion, or $59.62 per share. The warrants were obtained as part of the company's 2019 deal, which aided in the financing of Occidental's acquisition of Anadarko. If Berkshire exercises the warrants, the stake will rise to nearly 27%. Buying the entire company? The news on Friday fueled speculation that Buffett would eventually be interested in acquiring the entire company after ramping up his stake at low prices. He'll probably keep buying as much as he can for less than $70 or $75. You saved a lot of money if you owned 30 or 40% and wanted to buy it out at $95 or $100, said Cole Smead, president of Smead Capital Management and a Berkshire shareholder. This stock trades like it's in a casino. The market is providing him with all of the stock he desires. According to David Cass, a finance professor at the University of Maryland's Robert H. Smith School of Business, an acquisition is likely in the future. If you enjoyed your video, please subscribe to our channel and leave a comment. Will they take a chance and buy them?